we started with a working group back in 2019, I think, or early 2020, and we had participation in some experimental projects before as well, where Switzerland tried to do some first transactions on private and permissioned blockchains, Hyperledger and such things. And we started with exploring tokenization because we saw very early that this is really a topic we have to keep the eyes on. And the move to crypto was more or less also beneath the demand and the questions from our clients. It was also a question of, is that really a real use case? And when we started our project, tokenization was nowhere, but this is still the aim we are heading to. So crypto is one step, the first step to dive in. It is some sort of a business as well, of course. But the thing is to get hands on that blockchain technology with crypto to be able to expand somewhere in the future into tokenization.
On to the next big thing. Hello and welcome to another episode of RULEMATCH Spot On, the only podcast focused exclusively on the institutional crypto and digital assets industry. I'm your host, Ian Simpson, and if you want to know what banks, hedge funds, HFTs, asset managers, and others are doing in crypto and how they're doing it, this is the place for you. And now to my guest today, or rather guests. I'm very happy to welcome Pedro Hubli from Zürcher Kantonalbank, where he is head of digital asset solutions, as well as his colleague Michael Rausch, who is a project manager for digital assets. Gentlemen, welcome to RULEMATCH Spot On. So to start with, I want to make sure that our listeners and viewers really understand who we're talking to today. Zürcher Kantonalbank, one of the largest banks in Switzerland. Maybe for those in Switzerland and Germany, they know the bank already, but for our listeners in the US, UK, Asia, they might not know you so well. So can you just give us a little bit of a feeling about the size of the bank, the importance of the bank, and that will help us to kind of understand also as we dive deeper into things.
Happy to do that, Ian. We are the largest cantonal bank, and we are the second or third largest bank in Switzerland. Depends who you ask and what you count. We struggle a little bit with Raiffeisen for the second place. The first one is UBS, the biggest bank in Switzerland, and for sure UBS is playing in their own league. We are a AAA-rated bank, so we are the second safest bank in the world behind the German bank. We have almost 6,000 employees, and we have representing offices around the world in Mumbai, in Panama, Sao Paulo, Singapore, and so on. Our balance sheet total is more than 2 billion, and we are state-owned. That's in a nutshell.
Mm-hmm. And you mentioned state-owned, so a cantonal bank. I'm interested to know just what that means for you from a business perspective. How does that affect what you do, what you don't do, how you think about risk, and so on and so forth?
That's a good point. State-owned means that our board members are politicians, so they are not so money-driven like other board members. So for us, is reputation everything. And that explains a little bit our risk appetite, which is not so high. And sometimes it's very good. In other ways, I would like that we have a little bit more progressive.
Mm-hmm. But now ZKB has started, I think, just about a year ago with a crypto offering. That's quite a thing. That's for somebody in your position at this size with that kind of approach to risk. I'm sure that wasn't a hasty decision, something you just did like that. Can you give us kind of the background of how that decision came to be, actually?
It was quite a long and painful story, to be honest. It's really, and we surprised a lot of people that we offer crypto services now to our clients. The background was that we were contacted by other banks, to be honest. So the main driver come from the B2B sector. We were in contact with other banks, which we are in a relationship, especially for traditional trading. And they asked us because they have had a strong demand from their clients, and they were looking for a partner. And due to the fact that they are already in a relationship with us, they asked us to be a partner for them to enter the crypto market because they were not able to do it by themselves. So we have had a strong demand from the B2B sector. Of course, what we realized is that we have a significant outflow to trading venues, Bitpanda, Coinbase, and so on, from our own clients. It was funny to see that they sent the money to Coinbase, for example, made their trades, and as soon as they closed the trades, they sent the money back to us. That's why we find it out, because our compliance raised their hand and said, oh my God, we have so many money transfers from the Baltics. It's the home base of Coinbase. And we realized that our clients are interested to do crypto tradings. So what we did is we tracked the outflow. I've seen that there's significant outflow, and I've seen that the money came back. So our clients are interested to invest in cryptos, but they do not trust the trading menus. So it was a little bit the conclusion. And so therefore we decided to do it by ourselves and offer it to our clients.
Mm-hmm. And going down a little bit deeper, I have a few different angles or different things that if I was a bank, I'm not a bank, but if I was a bank that I would probably be thinking about when I decide to do this, for instance, what assets to offer, how to think about risk, how to think about AML, the different kinds of setup for trading, execution, custody, and so on. Can you just kind of walk me through some of those different points, maybe starting with what assets to actually offer?
Actually, and this is a very good question in sort of timing, we launched our third token or coin mid of August, that is Solana, and we started last year, of course, with Bitcoin and Ethereum. And we are looking at market capitalization and demand by our clients in the first place. So we never will offer meme coins like Dogecoin or something. That is nothing that you will ever have in the offering of a ZKB. So we have plans to expand our coin offering, and that will be, let's say, the blue chip coins of the market.
So liquidity, market capitalization, so on and so forth, track record. Yeah, okay. And when it comes to risk, to AML, I'm sure there were lots of, shall we say, committee meetings and so on and so forth, analyzing those things as well?
Yeah, that made a big part of the implementation phase. We started that back in 2022, I think, and risk management or risk assessment, IT security assessment, the compliance setup, and of course the way through all our management boards and the interaction with the regulator, with FINMA, that was a huge part of the project. So we did lots of internal and external risk assessments, worked with internal and external audit. All our technical components went through at least 2 risk assessments from the technical side. We built our compliance setup, or we started with that very early in 2023. I think that was one of the first trainings we did for the compliance team. Yes, and we started very early with the FINMA and informed them about what we are planning and what we want to do, and especially how we want to do that. FINMA was very interested in how we do that, and that leads me to the setup question.
But just following on that, I mean, there were some banks already active in crypto before. We've had some of them on the podcast. Were you going to them asking for advice, or not so much, just focusing on your own requirements as a bank?
To be honest, we were in contact with them. For us, the first decision was, should we do it by ourselves or should we work together with a partner? Due to the fact that we have had this strong demand in the B2B sector, for us was clear that at least one of the 2 parts, custody and trading, we have to do it by ourselves. We decided to based on our AAA rating where we have as a bank, we decided to go for a self-custody. So we offer the custody by ourselves, and we work together with partners on the trading side for the beginning. So that was absolutely clear. And then for sure, that's a small family, a small community. We were in contact with all of them, and we're still in contact. I think that is something which really works. We are all competitors, but in Switzerland, this community works quite well. It's not the biggest community at all, but it works quite well, and it's really easy to get in contact and that you help each other for a stronger marketplace Switzerland.
And as you were saying,
maybe I can just add one point there because we are talking about crypto all the time.
Right.
And we started with a working group back in 2019, I think, or early 2020, and we had participation in some experimental projects before as well, where Switzerland tried to do some first transactions on private and permissioned blockchains, Hyperledger and such things. And we started with exploring tokenization because we saw very early that this is really a topic we have to keep the eyes on. And the move to crypto was more or less also beneath the demand and the questions from our clients. It was also a question of, is that really a real use case? And when we started our project, tokenization was nowhere, but this is still the aim we are heading to. So crypto is one step, the first step to dive in. It is some sort of a business as well, of course. But the thing is to get hands on that blockchain technology with crypto to be able to expand somewhere in the future into tokenization.
On to the next big thing, obviously. And as you were saying, it was not so much a matter of trying to compete with another bank. I won't mention any names here, but just to protect market share, and even not so much against other Swiss banks and providers, but even against foreign companies, so-called crypto exchanges, and so on and so forth.
That's true.
It's interesting. I mean, I remember when the news was announced, and maybe some people knew this was coming beforehand, but still, it's quite a thing. And I remember previously people used to say, "Oh yeah, blockchain is great, the technology, DLT, Bitcoin, no thanks." Now it seems like, of course, things have turned around a little bit, or maybe, as you say, Michael, it's Bitcoin and blockchain. How do you kind of feel about that now, having had the experience of implementing this offering?
Honestly, our board members, our senior management, Michael and I, we are totally convinced about the technology. We believe in the technology. We know that will coming, and there is really a support across the bank for the technology. With cryptos, still a lot of concerns. So that doesn't change. We are live now for 12 months, and it's still the concerns are here against crypto, but for the technology, there is really a wide support in the bank.
So let's get down maybe even more into the nitty-gritty details, the setup, the processes, the implementation. As much as we can, go under the hood and talk about details. Just kind of walking through kind of the life cycle. If I was a client at ZKB, unfortunately I'm not yet.
You have to change that.
I might have to change that. I do live in Canton Luzern, so anyway. So I'm a client. I want to allocate some of my money to crypto. So I want to make a trade and buy. Now I understand ZKB works with a partner, a broker for executing crypto trades. Was there a particular reason why you went with an external broker? Was that a risk management, a counterparty risk reasoning, or what was that?
It's more or less a question of what's first. And when we thought of how to build that capability, we analyzed, of course, a lot, and we set up a real strategic framework which we are following, and we thought of custody is the fundamental and the basis for everything. If you can establish a secure, highly integrated automated custody solution, you are able to expand on top of that basis every additional use case. So Execution desk or trading capabilities weren't in the first place. Of course, it doesn't make sense to have a custody solution if you cannot bring something in or out. We do not transfer in and out, so you have to be able to buy and sell. So the first step was to work together with an external broker. It's from a project management point of view, it was to reduce a bit of the complexity that the whole topic has anyway.
And you know, Ian, traders in every bank are all the same. They are money driven.
Yeah, sure.
And our traders said the same. They said, okay, let's wait and see. If there is a success, if we have a corresponding volume, then we'll jump in and we do the trading by ourselves. But let's wait and see how it goes. And that's exactly what happened. So at the moment we have two brokers. We have one main broker, backup broker. And so we feel comfortable with this setup, but it's only a matter of time till we reach this volume, and then our traders will jump in and say, okay, let's do it by ourselves.
I mean, you could have gone to one of these crypto exchanges out there, or maybe those weren't exactly the kind of counterparties you wanted to work with. Is that fair to say? Yeah.
Fair to say.
Yeah. And now I've executed the trade, so I've bought 10,000 Bitcoin, let's say.
Wow.
You're more than welcome in our bank, Ian.
Sure. We'll finish the onboarding later. Now, two things have to happen, of course. You mentioned custody, so I have to be able to hold it now with you as my bank. Then you have to also book this trade in a core banking system. That's not something that's so sexy to talk about, but it is still very, very essential. How do you actually do that? How did you implement that?
I think it is a matter of orchestration and automation. So we integrated our new digital asset solution. We call it in that way. Highly automated. Everything is fully automated. We don't touch your order by any employee. You can do that 24/7 with us. That's also a bit a difference to some of the competitors. And in the same time, you enter your order in the mobile bank or web banking, whatever you use. It is mirrored in our core banking system and on the digital asset solution. And when the execution comes from the broker, we book the new position contractually in your securities account. And we work against the counterparty, against the broker on a netted base. So we have one netting process per day and then settle the net amount with our broker. And for you as a client, you have the same experience as you may know from trading the traditional assets and have the new position within seconds in your securities account.
And you know, in the crypto market, you always have this hassle with the pre-funding. And with even after this disaster with FTX,
right? Yeah,
you realize that the pre-funding is not riskless.
Yes.
So what we do, especially in the B2B sectors, is quite important. We take over the entire settlement risk. So even our B2B clients, our B2B banks, they will be settled immediately, contractual. And we take over the whole settlement risk. So they can give up the settlement risk. It's with us. As Michael mentioned, we settled the other day with our counterparty, but the clients will be executed immediately and settled immediately. It's quite important.
And just following on that, what kind of demand or what kind of, shall I say, you mentioned at the beginning, interactions with other banks that were wondering if ZKB could offer this. What have been the interactions since you have started this, and maybe the inputs or feedback that they have given to you?
From competitors or
from partner banks or the people that approached you in the beginning?
That's really interesting because what we see in the market is that it's like waves, you know. If something happens in the market, so a big player offer crypto services like as we did it, or if somebody else is coming, or that we reach a new all-time high in Bitcoin, then I got a lot of phone calls, and the older banks said, "Oh, we have to do it now. We want to offer such services as well. We have to talk." And then I talked with these banks and I said, "That's fantastic." Then what happens? Nothing, you know. And then I call them again 2 weeks later and they say, it's on our priorities. It's a little bit more down. We have other projects more important and so on. So it's interesting to see that is most of the time there are, if some external factors happens in the market, then we see more demand than
Emotions,
the other day. What is changing in general is that I have had a lot of discussions 1 or 2 years ago about the business case. So what is the business case for us as a bank? We are a mid-sized bank or we are a small bank. What is the business case for us? What do we expect? And now the discussion changed. What we more and more see in the market is this FOMO effect, this fear of missing out. And the bank realized that if the bank left and right of them offer such services, they have a strategic disadvantage against these banks. And that is more and more coming. I guess that will push with every new institutional or every new bank which is offering such services, it will grow in this FOMO effect.
I mean, we see even now that Jamie Dimon says that JP Morgan will let you buy Bitcoin if you want to. So it seems to be pushing even up to the very highest levels of global banks. Maybe just one question about pricing, not to get too political, but of course, me as a client, I'm willing to pay for the security of a bank, the support of a bank, and advice and so on. And yet, I do want a good price for what I do. As in other asset classes, when you have kind of 2-3 layers of service providers, that adds to the fees. How do you work with that, or how do you help your clients feel comfortable with the fees that they pay?
I guess our fees are competitive. And yeah, it's interesting because the willingness of paying higher fees is given in this market, most likely based on the volatility of the Bitcoin compared with other asset classes. But I would say due to the fact that we offer self-custody, we save costs, and due to the fact that we are not that we have a limited number of brokers, we can really be very efficient, and that results in I guess in a very efficient processing model, and it ends in a competitive fee model where we offer.
Michael,
As I said, we expected, as a bank with nearly 1 million clients, we expected to have a higher number of clients and transactions from the first day, and we come to that question later, I guess. But we really saw that, and we were lucky that we automated everything, and that is also on the cost side very efficient, as Pedro said. So we didn't have to build big new departments and big new teams to process the digital asset transactions. This is within our existing systems, totally automated and very, very cheap, I would say.
That's a very good point, Michael, because I remember the time at the beginning, as we always said, it's just another asset class.
Yeah.
And that was really our brand, just another asset class, to say, okay, there is no new operational team necessary. So the guys which are doing the settlement very well every day, they can do the settlement for this asset class as well. And we see that it works.
So that's saves on things and helps automate. I mean, technology is great, right? Yeah.
It is an enabler.
Sure.
But I wouldn't choose that brand again, just another asset class, to say it honest.
Anyway, it probably helped convince a few people higher up the ladder that this was going to be a good move on your part. So now you've been in business with the offering for just about a year, as you said. I'm sure there's many things that you have learned along the way. You mentioned some of them in the good sense, not to be pessimistic or negative. Have there been some things that you learned, we could have done it differently, perhaps we should have considered this? Is there something maybe that was a surprise in any way in that process?
Really a good question. Let me start with the positive things. We had some ideas of how many transactions, how many clients, and the ticket sizes that will come, and we were really surprised about the sizes of the tickets in sort of average and median as well. And we are, I would say, perfectly in line with the numbers of clients and transactions. And yes, what we learned in general about the project, I would say we could have make even more effort in education, information, and communication within the bank. This is really important to. We did that. I would say to a very high extent, but this is always a thing you can do better. So maybe that.
Mm-hmm.
For me, the most surprising facts after 12 months are that the average crypto investor is older than expected. Mm-hmm. We expected this 20, 25 years old guy, which invests 1,000 Swissy per trade, and it's totally different. So our average crypto investor is between 30 and 50 years old, is male, and they invest much more than expected. So that's a surprise. And the other point is that 40% of all of our crypto investors, they have to open a portfolio with us. That means that they only hold money with us, cash with us, and now this is the first time that they invest is in crypto. They didn't before. And we try to sell them funds and everything, shares, bonds, everything, and they were not attracted by them.
None of that was as fun as crypto, yeah?
Yeah, absolutely, absolutely. I don't know. What we've seen with our crypto investors is because I've got a lot of phone calls. You can manage your clients, so there are possibilities to optimize your investment and so on. To be honest, our crypto investors, they are happy with Bitcoin. There's a strong dominance for Bitcoin, and they are really following this buy and hold strategy. They bought it, and now they wait till the Bitcoin is 1 million, and then they are happy and sell it. So that's as simple as that.
That might take a little while, but that's good for you if they have it at a very secure bank like ZKB. That's good. I'm just interested, as this has developed, and you've obviously generated a fair amount of business from this. Has the crypto offering kind of changed any perceptions or the positioning of the bank towards your clients or towards others in the space? Maybe some that were very first and early in the space were pioneers, first movers, and so on. That is not ZKB, but has having this offering now changed something for the bank from the outside or towards your clients?
It did, but honestly, our participation in the Helvetia project from the Swiss National Bank, where we issued digital bonds and settled against wholesale CBC, with this project, we have got much more media attention than with our crypto offering. But it was interesting to see, especially last year, that that the banks were very interested to talk with us because they were very surprised that the bank, which with history longer than 150 years, is offering crypto. So that was a sensation in especially abroad. What you've seen this year is that it changed due to the fact that the US banks are pushing into this crypto market. We have seen that it's more and more state of the art, and we are not that special anymore compared with last year.
And the demand and the noise in the media really came from the B2B side, and on the B2C side, we do not have a very aggressive marketing or communication strategy that is on purpose. You saw that, or I mentioned we did a silent launch of Solana. Fortunately, our clients saw the new possibility, but that is our strategy, not to be the loudest, not to be the fastest, not to be the cheapest. So, but of course, in the B2B sector, where everyone talks to everyone, that was really a sensation, I would say, last year.
That was interesting to see. We have got a lot of invitation to panels as well, and this year it's really totally different. That's kept me out of panels. That hit my ego, to be honest. And we've seen that the market is changing, especially now with the situation from the US banks, which are very aggressive, jump into the market. So it's get more and more a common service from a bank.
And potentially, you mentioned ZKB is the second or third largest bank in Switzerland. Maybe this puts some more pressure on those a little higher up to eventually move in this direction as well.
Who knows? Who knows? Yeah, could be. But I see as Michael mentioned before, crypto is only one part of the game.
Sure.
But we still hope and we still believe that we see a mass adoption on the digital asset side as well, because the technology that's fine. Everybody is happy with them. But I think there is the point where we have to grow and to find this use case in the digital asset space which give you an immediate benefit. That would be really a game changer.
So let's back up and look at the bigger picture, since you said, and I think we also very much agree that crypto is just the first step. Banks or whoever starting crypto will be the first ones to be in digital assets, tokenized assets, and so on. But looking at assets in general and capital markets in general, how do you think the technology and we'll get to stablecoins in a little bit, how does this fit into the bigger picture of the changing face of finance, whether in Switzerland or somewhere else?
What we think and how we see the future is some sort of a hybrid model where we have the traditional rails for securities and payments beneath a new infrastructure based on DLT technology, whatever that will be. And we are heading towards that. And I think a bank has a bank like us. We are on the way to build that dual capability. We made the first step to serve both worlds. And what we see in the market at the time being, platforms for tokenization, second market facilities are rising up. I think we have, from the technology side, everything in place. So it's a matter of let's do that. And there are some political, reputational risk, we named it, issues to solve.
Unfortunately, our sweet spot is a little bit over. To be honest, best time is over.
For ZKB or for Switzerland?
No, for Michael and me.
Oh, for
ZKB. The point is that, 3 or 4 years ago, if we have had a use case with digital assets, and we went to our senior management that we have a nice use case with another bank, move a digital asset, a token from A to B, and afterwards we publish a press release. Everybody said, fantastic, go for it, go for it.
Now the bar is higher.
Absolutely. Now you need an immediate benefit. Our colleague from AI is now in this sweet spot. We hate him. And he's now in the sweet spot. And what we have to do, we have to present the business case for everything. If we want to do something with digital assets, then you have either additional revenues or you have an efficiency gain. Or nobody is interested in PoCs anymore in this space.
For sure. And maybe part of that, and this is now going a little bit different direction, but it maybe fits in as well. Part of that may be this so-called cash leg, so the stablecoin side of things, because many of the efficiencies, the new cool things that you can do with DLT blockchain do require some kind of automation, which would imply some kind of cash on the blockchain. So a stablecoin, what kind of benefits would you see for stablecoins for ZKB or for what you think could be interesting in the future?
The benefits are the benefits the clients have, and when I want to answer this question, we have to answer the question: what is the benefit for the client? And what we see in the moment is that there is a huge demand for stablecoins, but it's driven by institutionals. It's more than 95% is institutional transfers for liquidity management, collateral management. DEX, arbitrage, such things. And they do that. Cross-border payments as well, of course, big corporates. They do that because it is available 24/7. It is instantaneously or nearly instantaneously, and it is on the cost side, very, very cheap. And that is what our clients search, and if we can help them going into that, we would try to do so. Honestly, we are far away from that point. Stablecoin is another thing. It's not the same as crypto, But of course, if we have these clients with these needs, I would say as a universal bank, we don't even want to, we have to serve these demands from our clients.
But we should not forget, and that's only between you and me, Ian, is that what is good for the client is not automatically good for the bank.
Sure.
And that's a little bit, we have the demand from the client side, but we have to find a business case for the bank as well. I think that's a little bit, it's one of the points which is still open in case of stablecoins. But for sure in Switzerland, if we talk about stablecoins, we have many other challenges. There's the missing regulation, there's the missing business case. So we have not the same situation like in the US, for example. That makes it so difficult. And what I miss a little bit is the support where we have had for the DLT Act. If you remember 4 years ago, DLT Act, there was a collaboration between politicians, Swiss National Bank, regulator, commercial banks, all work together in one direction, and we have had a DLT Act in no time. And everybody was so, whoa, so impressed. And that was really a success story, still a success story. And it's exactly what I miss a little bit now. There is no collaboration anymore. So there is no politician which are willing to go and push this topic. I do not see the big pushing factor from the national bank. So therefore, we struggle a little bit with the stablecoin, and we see abroad that there is, so many things are going on. And in many countries, we have a regulation already, or that is coming. And we have to be careful that we do not lose the contact with the rest of the world.
It's US dominated,
Sure.
highly in the 90%. Europe is coming now with a euro from
All Unity.
All Unity, yes. We have to see who can be maybe an issuer for a Swiss franc stablecoin. The future will show us.
I assume ZKB would not be issuing its own stablecoin.
I think it does not make sense that every bank issues its own stablecoin. So,
although at the same time there are discussions, of course, mainly in the U.S. about whether it's better to have fully backed stablecoins from private issuers or to have tokenized bank deposits, which are, a different beast, so to say.
Totally different things. And at the time being, stablecoins with functionality are the better option, I would say. Tokenized deposits is something like, I would say, complement for other use cases. In means of payments, you have the issue, for example, of interoperability between the two tokenized deposits from different banks. And it is legally total different thing.
Yeah, it's a very complex state. Of course, maybe a bit too bad that there's a lot happening in the States. MiCAR, stablecoins in the EU and Switzerland, might actually have to be playing catch-up after having been at the front for quite a few years. But then going back to tokenization, you mentioned some things that you worked on with the tokenized bonds. Where would you see the benefits of tokenization, thinking of it from the perspective of a bank? Not necessarily from clients yet, but from the perspective of a bank.
Ooh, that's a difficult question. Honestly, the digital bonds where we issued, the benefit was on the media side. I guess we have got a lot of attention, and the issuer as well. That's over now. If you issue a digital bond right now, then nobody takes care of it. From processing side, honestly, I don't see that big benefits at all. And that's one of the problems or the challenges where we have to show these benefits. It is a little bit different in the fund sector. I see much more potential in tokenization of funds because there we have really a settlement process which is like in the 80s or 90s. At some point, are fax included or so. There is really potential to eliminate the intermediaries and to make the processes much more efficient. That's the reason why we work on this topic, to tokenize funds, to make the funds settlement processes more efficient. It's exactly what we are doing, and there I see a huge potential that we can unlock the benefits of the blockchain technology. For digital bonds, it was a nice entry point because it's quite simple, not that rocket science, but I think for the future we need either new instruments which are not available in the traditional world, or benefits on the operational side, because I do not believe in a one-to-one copy of a traditional instrument in the digital world. We need some additional features or benefits, otherwise it doesn't work.
Mm-hmm. That's right. Putting the existing assets on a blockchain without anything else does not make sense. Mm-hmm. So I heard a term last week, security token 2.0. That means the next generation of smart contracts for modeling that will bring additional programmable features with really value added. One example, daily interest payments of a bond or something like that, which is not possible in the traditional world. So if we can make it in that direction, and there are some asset classes which are better suited for that, let's say derivatives or bonds, especially funds, you mentioned, Pedro. I don't see that we have to tokenize equity blue chips now from the Swiss market. That works very well at the time being. Mm-hmm. So tokenization must be value-driven and not by ideology or something like that.
I mean, some large asset managers have tokenized money market funds, and some people make the statement that those things as collateral can eventually be very interesting from a collateral movement and a collateral mobilization standpoint. Is that something that would make sense to you as well?
Absolutely. I think that's a very interesting point because collateral management is exactly one of these topics which you as a bank, you have to do it, but it's only operational risk for you. You spend a lot of money and you take a lot of risk to move collateral from A to B to C and then the other day back. So it would make absolutely sense to tokenize this collateral and find a way to reduce this operational risk and the costs if you can move a token instead of the whole collateral. Makes absolutely sense for me. It's very interesting. Yeah.
Mm-hmm. Something like pre-IPO shares or even other things that could be tokenized, which have no kind of financial place nowadays. Are those things that you would find interesting as a bank, so-called non-bankable assets? Is that something?
Yeah, we were in contact regarding real estate. Mm-hmm. That was a hot story, I would say, 1 or 2 years ago. Then we have had a change in the interest, so we went from the minus to the plus, mm-hmm. and then it's gone more or less. Real estate tokenization is very interesting, but the problem is a little bit you end up in a share. Mm-hmm. You have to use a SPV, and I'm not sure that the customer experience is then so good. As long as it's not possible to enter your name in the Grundbuchregister, mm-hmm. I think it's difficult, or then you have a share instead of a fund. I'm not sure if it works. It's always an example, but at the moment we do nothing in this direction. Maybe if the interest going in the minus again, could happen that it changes. But that's real estate is a point. The other one, as you mentioned, is with the IPOs and so on. It's always a little bit the question of the due diligence, who is responsible for that. I like the way that you make new asset classes possible for investors, mm-hmm. which were not allowed to do it before. But we have to be careful because we have high standard in case of compliance and due diligence, and we want, for sure, even in the digital world, we want to keep these high standards.
Mm-hmm. And have you had discussions, again, big picture at ZKB, what, say, some part of capital markets do move on-chain, and you have tokenized different things. What kind of a role or what kind of a position the bank would like to take in that kind of world?
I think the same position and role as we have today, because our role is to serve retail and institutional clients with every financial services needs they have, and that will not change by technology. So as I mentioned, we believe in that hybrid future, build up our dual capability and try to do that. For the client, it does not. It is not relevant if in the background you have a DLT processed infrastructure or a traditional one. So it's like the internet. You don't know that you use it.
Mm-hmm. Mm-hmm. And you mentioned that everything is in place for tokenization. Is that really the case, or are there some parts of the value chain maybe still missing? For instance, a full-fledged secondary market for tokenized assets. Is that something that would make a difference to accelerate and move things faster?
Of course.
Mm-hmm.
We did a proof of concept, or internally we call that proof of value, 5 years ago, and we tokenized equities and bonds on a testnet of Ethereum, and at that time there was no secondary market we could imagine. So we thought of, we have to build something on our own in our prototype with a billboard, with a bid and ask, where clients can sell and buy to other clients, and now we see these secondary market facilities rise up. And I think that is very, very important. Also important is the topic around financial information, oracles that deliver price feeds, NAVs for NAVs and NAVs for funds and such things. It's coming. And from a technical side, if you look what you can observe in the markets and put that together, everything is there. Mm-hmm. It needs a bit more traction. Mm-hmm. But if you look at the programs of all the events and the panelists you see nowadays, the topic is always for tokenization and stablecoins.
Yeah, we are with SDX from the beginning, together with UBS and Credit Suisse at the time. So yeah, it's essential that we have secondary markets. Otherwise, it doesn't work.
And I mean, tokenization can potentially, I think it was Larry Fink who made the case that private markets, and private equity and different things like this can be democratized in a big way. Do you think it will take big players like that, like a BlackRock and so on, to really push things forward? Or will it be more bottom-up from projects and people doing individual things in the tokenization space?
No, so big players helps, because we all, ZKB as well is more the smart follower than the first mover. So if you have such big players like BlackRock, and we see that with the Bitcoin ETF in the US, for example, if you have such big players which go ahead, it makes it for us much easier to follow them.
And you mentioned the proof of concepts on Ethereum, right? That seems to be a standard kind of in the blockchain space. Would ZKB, tokenize things on Ethereum or some other chain, or how do you view kind of public versus private blockchain infrastructure?
I think two things. One more or less official, and one personal thing. Within ZKB, we talked about the upcoming of public blockchains, and this is one of the reasons why we started with crypto, because you come into contact with these infrastructures, Ethereum, for example. And personally, I think Ethereum made a great job. It's total value lock, still the biggest platform for tokenized assets, but there are others. I think there is room for some platforms. Interoperability will be a topic, but I think that can be solved. So yes, Ethereum as one of a few really important settlement layers, global settlement layers in the future. That is one thing I can imagine. If we go into that and tokenize something for clients or some assets from the bank, that is a question of our roadmap. Pedro said we are a smart follower. We have a focus on regulatory compliance, IT security. This is in the focus, and as the time goes on, I'm sure when more of the securities market or banking markets go on to DLT, we will follow
whatever is being pushed or used most in the space. Yeah.
The question is that really relevant if it is at the end Ethereum or Polygon or maybe Solana or something else? Again, for me as a guy from the more implementation side of the topic, of course, it makes a difference if it is A or B. But for the client, I think at the end,
it doesn't matter so much.
Not so much. Yeah. There are some topics you have to keep in mind if you want to tokenize what asset ever, which chain you choose. There are some differences, but at the end, the client he does not matter what he uses. It is exactly like the internet of value. That's what it is.
And maybe just to kind of wrap things up, and now having gone through your whole experience at the bank and also looking forward to some things that you may be considering for the future, let's say there are some other banks out there that haven't implemented a crypto strategy yet. Maybe they want to. What kind of, shall we say, advice or learnings or things to keep in mind would you share if perhaps they might even be watching or listening to this podcast?
They should call me. I make their life easier.
Well, give them a teaser.
No. That's really something which is very important for us, that we can keep the impact quite low on their side. It's important for us that we do it in a really as a collaboration. And that worked quite well. We have one bank is live with us. We have two other banks in onboarding. So it works if you work together, and that's something which is very essential for us. And we help wherever we can to keep the impact on the bank on the lowest level.
From the implementation side, is there maybe, to be quite fair, somebody even who doesn't come to work with ZKB but wants to implement their own setup and whatever, something that you would tell them to keep in mind or think about or consider?
Yeah, even if I'm representing the tech side here on the table, I would say talk to your risk managers, to your compliance office, go to your boards, educate and train your people. This is the first and the important thing, and that never stops. Technology is an issue, but that is feasible. But getting the board in as a supporter and train your organization, this is really the most important thing.
Very good. With that, I think we'll wrap it up. Thank you very much for joining RULEMATCH Spot On. Pedro, Michael, it's been a pleasure having you. Maybe in 1 year or a year and a half, we'll come back and have a further discussion about things. Maybe tokenization has really taken off by that point. We hope so. In the meantime, all the best and good luck.
Happy to do that. Thank you, Ian.